completed? Yes? Okay. Turn over. So once again, revenue is the inflow from delivering goods, producing goods, selling them. It's a ongoing major central operations. And basically you will record them based on accrual accounting. Means as long as they've been earned in that period. Okay? So look at this. Rent that is paid in advance must be expensed when the asset is used. Okay, this is talking about rent accrual accounting. Cash received in advance for goods is only recognized when you have done the revenue producing activity. Okay, so all of these assumes that the business is ongoing. Now, if I receive money from my client for 5 years of bookkeeping services, that means I believe my company will go on for the next 5 years, yes or no? But can I take all the 5 years income and record it in 1 year's income statement? Your answer will be no. Why? Because I've not done all the 5 years. Each year is a separate year. Each year I earn when I perform the service. I render the service, yes or no? The rest of them, if any time my client goes out of business and says, hey, I'm in a difficult situation, can you refund the money since you didn't do the job for me? And I'm going to close shop. I would have an obligation to return the money back to the client, yes or no? Alright? So then if I'm going to return, that's my liability, right? So I'm holding somebody else's money, which I've not rightfully earned because I've not done the job. So that's going to be my unearned income. Yes? I need to understand what it means. Now, revenue recognition. Is it realized, realizable, or earned? Now, realize when goods are exchanged for cash or promises of cash. Okay, your promises of cash are like trade receivables and checks. Okay, now realizable when, can you please put a W there? When assets are received, held, readily convertible to cash or claims of cash. They're basically future cash. Okay, so it also can be looking at your promises of cash. Convertible to cash is your trade receivables. Now when it's earned means you have done the job, what you need to do to receive it. Okay? So, realized, you have already got the money in hand, your check is there, you're going to get the money soon, it's almost there. Realizable, they promise to pay you, okay? They've given you, they bought things in credit, okay? In the future, you can go and get your money from your customer. So it's almost there, but not there. So the difference is that realizable means you almost got virtually certain that the cash is yours. Realizable, it is very highly probable your customer will pay you. Because if you know that your customer is not going to pay you, you're not going to sell on credit. You will insist on cash terms. Okay? So that's where the slight difference comes about. Now, then the next question is, how do I know that I've earned the revenue? How do I know that I've earned the revenue? Now you go for a haircut. What happens? They cut your hair. But then when do they recognize? If you're a hairstylist, you're a salon now. When do you recognize the earning of your income? When you receive the cash, is it? Then? Sorry?
When you get your pay. When you get the pay.
When I get the pay. No, okay. Now when you